Wilsey, president of Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of the investment firm Wilsey Asset Management. Now, one thing I try to do, besides run my investment firm, is actually help educate, inform about investing, the economy, finance, and so forth. Well, one thing I want to talk about today is why you should not buy hot stocks. I know they feel good when you get them. They go up like, oh, I'm making all this money. It's so great. But long term, they don't work out for you. And I've been doing this now for almost 45 years. I think it has been 45 years. And what I try to tell people is it doesn't work long term. So I got another example for you. Try to back everything up with history. Software companies. Now, software companies are a hot stock. They did very well a couple years ago because, oh my gosh, you know, what's happening is this AI thing is coming in, going to do great for these software companies. Well, now AI is starting to hurt the software companies. And the hot software companies like Salesforce, Adobe, and ServiceNow, I mean, when you look at the 5-year return, which again, you should be investing for long term, Adobe, great company. Last 5 years, your return is a negative 43%. So you've lost almost half your money over 5 years investing in Adobe. ServiceNow, hot popular stock, 5-year return about a negative 5%. And even Salesforce, which is very well known, you know, Salesforce has been around for many years. Last 5-year return, you have a negative 16% on that company. And it's just terrible. And then I gotta tell you, it's not gonna go back to where it was before, because what happens when you invest is over 5 years and going forward is industry changes, competition comes in. And what happens with these hot stocks is they look at just the growth of the sales. It's going to be phenomenal. Oh, this is going to be great, and they pay these high prices for them. Well, as I said, things change, where now you have industry is changing to where the AI was going to be the beginning for these software companies. Now it's not so good. Good example too, Anthropic came out with Claude Code, which takes less time to build these software programs that they have. So you have companies that come in and do things better than what you're doing. Well, that destroys the return on the portfolio. And what you have to look at is you've got to look at the declining sales growth. And again, I want to point out that's declining sales growth, not declining sales. But it still is bad because you pay these high prices of these companies. We base everything on earnings. When you're paying 50, 60 times earnings for some of these companies, some companies have no earnings at all, and they pay these enormous prices for the future growth. When that growth starts declining, you'll see the bottom fall out, and these stocks will fall dramatically. Also, too, some of these hot software companies, they're starting to default on loans. So the last 24 months, about 13 software companies have started to default on loans. And competition comes in to where you got these little companies that they're just starting to come in. They're starting to take small pieces, little pieces of the market share from these big companies, and that hurts over time. So this is why when you're investing, don't try to hit the home run with just one stock. That's not going to help you out. If you want to build long-term wealth, you want to build a portfolio of 15, 16 good businesses that are in the food industry, in the finance, insurance, transportation, different things. Don't try to swing for the fences. Try to get that home run. You're probably going to strike out, and then you get to an older age like, gosh, I don't have much money invested because you took too much risk when you're younger on these hot stocks. So stay away from. I hope you don't have any of the hot software companies because they're not going to turn around. So be careful. Thanks for watching. I'm Brent Wilsey, again, president of Wilsey Asset Management, the investment firm. We'll talk more next week right here. Have a great evening.
This has been Wealth Wednesday, sponsored by Wilsey Asset Management.